Let's get more market commentary now from Zwelakhe Mnguni. He's from Benguela Global Fund Managers. Zwelakhe, thanks very much indeed for your time. So you look at what's happening on the market at the moment. I mean, broad gains this afternoon. The all shares up more than 1%. Banks and miners doing well. I mean, is this international sentiment? What's behind the good showing?
I think the results came out from the number of financial sector stocks. So the insurers, the banks, I think the numbers came well ahead of expectations. And I think we have seen that that has given some momentum to the financial sector. I think also we saw the numbers in some of the miners. The numbers were not too bad. And I think the market took comfort in those numbers after actually punishing the stocks. I mean, yesterday and today was earlier today, the basic material sector was under a lot of pressure.
Yeah, and look, you mentioned insurers. It was a good day for insurers. Discovery was up on its share price as it held dividends. Momentum also showing results that pleased shareholders. You know, I mean, just given what they said in that update there, you know, what do you make of what's happening with insurers at the moment and how did they fare?
There's probably two things that are driving the insurance performance at the moment. So I think the first one is that maybe probably three. If you look at the first one being that they had these COVID provisions that they had put into their accounts on expectation that maybe the mortality and morbidity would get worse. And we've seen a lot quicker stabilization of those elements in the insurance numbers. So that is the first thing where they've actually had to write back some of those expectations. The second thing is that I think the market seems to have bottomed to some extent in terms of the relative performance. So the market being a major contributor into the performance of the financial services and insurers and banks. So that has been a bit more stable year to date. I think the last thing is that on the back of things like COVID, on the back of things like disasters in Natal, they've been able to push through quite a significant amount of hikes in their premiums. So they've been able to get some shelter there while the cost has been well managed. So I think Discovery did well, but I think Momentum's performance has been exceptional for the last 2 years now.
And then, I mean, it's an interesting update from South Africa's largest alcohol producer, Distell. I mean, it managed to sort of pick up its operating profit, but again, you know, one of many companies complaining that power cuts are really strangling business. 12.5 million rand directly lost by Distell as a result of power cuts. I mean, it's a small figure compared to some of the big retailers, but I mean, again, it shows what power cuts are doing to the economy, isn't it?
Absolutely. I think if you look at the impact, it's material, and I think it's going to get worse. I mean, if you look at the developments now at Eskom, I think the departure of Andre de Ruyter, while you know it was all well planned, I think there's going to be a bit of a change of guard that's going to be a bit disorderly, and that disorderly change of guard will probably mean that we might see a bit of loss of direction in terms of the execution and trying to ensure that things get where they get to. I think that that element is going to feed through into the economy, and I think our economy is going to take a lot of strain. The mining sector, from our analysis, we think that the mining sector, we think that the retail sector would be badly affected by this. The food producers is the third sector that we looked at. I think those three sectors would probably take a lot of strain. The financials might benefit because there'll be a bit more demand for their loans, and that would help them. But certainly not a good story if you look at the impact of Eskom on the likes of Distell.
Yeah. So Zwelakhe Mnguni, thanks very much indeed for bringing us that insight on the markets.
Thank you.